What is up? This is the Working Investor. Today we're going to have a triple header battle between the Nasdaq income funds. We're going to look at the cover call strategy of the Nasdaq, and we're going to use one of my favorite cover call strategies, TDAQ. By the way, nothing here is financial, tax, legal advice or NAV erosion advice. This is purely for fun and entertainment purposes only. Please see all my disclaimers. So this is from Tap Alpha. They do a 0 day to expiration cover call strategy. They also have some interesting other strategies they could do to get you some upside convexity. And the manager does a great job with his alpha. This is just my opinion. Next, we're going to look at put spreads with a long position. That means it gives you exposure to the underlier. In addition to that, it also does put spreads to derive income. The cover call also has exposure to the underlying, but I have to delineate the put spreads with long and put spreads without long. So the put spreads with long position, we're going to use QLDY, one of the most hot stocks out there from Defiance, because this baby pays twice a week. And they termed it the Nasdaq 100 Lightning Spread Income ETF. So they give you synthetic exposure to deep in the money call options on the Nasdaq 100, and they also do 0 day to expiration put spreads at the money or slightly out of the money, but not far out of the money, from what I understand. And we're going to compare that to the third element, put spreads only, no long position at all, and they do it on 3x leverage Nasdaq, which is the TQQQ, and basically there's no long exposure. And this is from Granite Shares subsidiary fund, Yield Boost, their TQQY fund. So we are looking at total returns. We don't have a lot of data to backtest. We have pretty much just about 36. Oh, I got to go back. So we're looking at 9/18/2025 to 10/25/2025 because QLDY came out 9/17/2025. We have data from Seeking Alpha from the 18th. So let's go ahead and break down this chart over here. So you can see here in total return, we'll go from the top to the bottom. So the triple Qs are up 9.59%. TDAQ. Now look at this, guys. TDAQ, remember, is a cover call strategy. Capped upside, right? They're up 4.07% in total returns. They are actually beating the Nasdaq in this period of time. And the Nasdaq is up 33.78%. TQQY, right? This is the put spread with no long position. And remember, when the stock goes down, let's say it's a 2% wide spread, for example. I'm not saying it is, but if whatever the width of the spread is, you're down the width of the spread. They don't own underlying stock. So hence, you know, if they're underperforming, that means they blew through the spreads. That's the only thing I could think about. So TQQY is up 3.76%, underperforming the Nasdaq and underperforming its underlier of TQQQ by a lot, because there's no actual exposure to the upside. QLDY, QLDY has exposure, has a long position in, let's say, what is like the Qs, right? And it does that extra income. It has that put spread. So, and you could see that it's up 3.24%, but it's underperforming, I guess, because the market was down and it blew through those spreads. So you could see here that the TDAQ is, I'm very impressed with TDAQ from this chart. And again, not financial advice. You can see how smooth it is. It's not as volatile on the upside. It's not as volatile on the downside. It's kind of like very stable and outperforming the Qs. In case you were getting really excited about Yield Boost's positive return, if you look back since inception, now we're looking back from 2/26/2025 to date, and you compare TQQQ to the Qs, to QQQI, which is a simple cover call. I didn't put TDAQ because it hasn't been around that long. And I compare it to TQQY, you can see TQQY from Yield Boost or Yield Bust is the worst. Only total return is 3.49%, while its underlying is up 42.48%. The simple Nasdaq is up 20.38%. A simple cover call strategy, which lags from the Nasdaq, is up 16.33%, which has capped upside. A capped upside fund is beating it 4.67 times more return in a simple cover call capped upside strategy compared to a triple leverage out of the money put spread strategy. In case you want to think I'm picking on the Granite Shares funds, I'll add in TDAQ and we'll go back test it from the time I started trading here, 9/4/2025, 50 days. Let's take a look. So just to show you, I'm not cherry picking the dates from 9/4/2025 when TDAQ came out to date. You can see here, look at TDAQ. TDAQ, third from the top, is up 7.85%. Yes, in this timeline, TQQY had beat it, but if you look at the bigger picture from the beginning, TQQY couldn't even keep up with QQQI. And I'll keep following these funds and see how they do. So far, every shred of data is telling me that TDAQ has been beating the Qs. And yes, I do see periods of time where TQQY has beaten other, the Qs itself. But on the biggest picture timeline, it has underperformed wildly. So now we're talking about a competitor. It's not out yet, so you can't see it on Curve's website, but it's called QYLD because they're going to kill the ulti. I think they're going to try to outperform ulti. I heard Income Architect talk about it because he was talking with Howard from Curve that they kind of want to do a similar strategy to the KGLD, where they give you the beta of the underlying, and they have cover calls. So how do you have capped upside with and give you the performance of the underlying? So they actually have additional long positions to give you more of that exposure to the underlying. But that can give you kind of like a leverage play. So we'll see when it comes out a little bit more. We'll have more information. So I don't really know much, but I'm telling you, there are competitors out there. Sometimes first to market is not always the best, because then people it's good to be first to market, but then if there's weaknesses that a lot of investors are complaining about, that gives there's a problem, and then there is a problem to solve. So other managers come out and try to solve that problem. So we're going to look out for the rendition 2.0, and I'm sure there are other companies out there trying to do that, to fix that problem with the price decline and everything. Anyways, this is the Working Investor over, and I hope you guys have a wonderful trading week. All the best. Be well.